Awesome. Welcome, everyone. I'm super excited to have this opportunity to provide this webinar, especially with Alexandra. Super excited to see also what questions you may have as well, too. And yes, Twinkle, the recording will be available. I'll send an email out afterwards. So this way we ensure you are able to go back to it. Plus, we're also publishing an article that's also going to cover all of this in addition, in even more detail, perhaps. So this way you'll have two things that you can refer to going forward. And of course, Alexandra and I are always available, so you can reach out to us on Twitter, Twitter and LinkedIn, maybe Instagram. Those are our handles on the bottom. So please feel free to take advantage of that. So before we get started, my name is Mohammed. I'm the CEO of Benji. We find tax write-offs for Canadian freelancers, specifically, should I say, sole proprietors and unincorporated individuals. For those who don't know, I'm also the executive director and founder of Women in Color. It's a federal nonprofit here in Canada, where our focus is to amplify and advance women, people of color, and LGBTQ plus professional in tech. And if you haven't yet listened to it, go check out Freelance Canada. I'm also the host of the podcast there. We cover all things freelancing in Canada because it's about time freelancers in Canada had some content specifically for themselves and not just for the US economy. And you can get in touch with me at HeyMosif on Twitter or LinkedIn. All this said, this is not about me. So let's talk about how to file your taxes as a freelancer. Again, this is a judgment-free webinar. There are no such thing as bad questions. Please ask all of your questions in the chat. I'll be moderating that, and I'll be asking that Alexandra. And in terms of our speaker today, Alexandra McQueen is a certified financial planner. She teaches, advises, and writes about personal finance in Toronto as a freelance writer, as well as advice-only financial advisor. So if you ever have any questions specifically for your future financial planning, you can definitely get in touch with her. Although I'm not sure how many clients she's taking on right now, but I'll leave it to her to talk about it there. I'll stop sharing my screen here so Alexandra can take over. Alexandra, over to you.
Okay, so here we are. How to file your taxes as a freelancer. So like Mohammed said, I'm a freelance everything. I'm a freelance everything to do with finance. I've actually been freelancing since 1996. So it's 25 years of filing my own taxes as a freelancer. So, I think that freelancers can often think that taxes are kind of belong to accountants, but taxes don't belong to accountants. They belong to you. And that my goal here is to empower you, whether you do your taxes yourself or take them to someone else, that at the end of this hour, you have a much better idea and feel confident about what you need to know in order to get your taxes done for this year and any year. So here I am. I've been a certified financial planner for a long time. I can tell you what that is if anybody's interested. But tax is one of the things that I have expertise in. I'm a founding member of something called the Financial Planning Association of Canada. I do, a bunch of other things, but those are the main things I'm focused on now. And here today, we're here to talk about tax. But before we get going, it would be really nice to have a sense of who is in the room. Like, what are your questions? What are your questions that you would like to make sure that we cover today? Or what are the big concerns that you have?
You can put this in the chat, please.
Yeah, I can't see the chat, so you're gonna have to moderate for me, Mohammed. Tell me what people are saying. Yes.
Once people start typing, I will moderate. I think everyone's being a little shy. Oh, claiming around work from home.
Big one for this year. Definitely a big one for this year.
Okay. A few people definitely saying filing and remitting GST, HST.
Yes. Yep.
As an artist, freelancer, can rent be a write-off?
Yep. We are going to cover all those things.
Perfect. I want to make sure I don't fill out the T215 form incorrectly. Of course. Yep. Okay, so all the things we're going to cover, that's good.
Okay,
that's good.
that's very good.
Navigating parental leave and time frames for benefits. Ooh, that's we have a podcast episode on that. Working for clients outside of US, outside of Canada.
Oh, outside of Canada, yeah.
Yeah. Okay, so lots of questions coming in. Perfect. I'll shush.
And if I don't get to those, remind us when we're on that topic, for me to cover that. So here what are we covering today? Understanding your taxes as a freelancer, getting ready to file, filing, and then what to expect from the Canada Revenue Agency, the CRA, after you file. Like, those are the 3 stages. I'm going to get ready to file, I'm going to file, and then it's in the hands of the CRA. What are they going to do? And we're going to make sure we have lots of time for questions and answers. Okay. So before we get started preparing to file, let's talk about what it is to be a freelancer and file your own taxes. So somebody's already mentioned this, the T2125. But when you're filing your taxes as a freelancer, really what you're doing is you're adding one form, this T2125, and we're going to look at it in detail in the next few slides. So you're still preparing a personal income tax return. So everything that before you were freelancing, when you did a tax return, or if you did a tax return and it had like employment income, maybe medical expenses, maybe childcare expenses, maybe charitable donation receipts, you had all those things, you put them together on your tax return and you sent it in. You're still going to do all of those same things, but you're going to add your freelance income on a specific tax form, this T2125. The other big difference is that when you're an employee, your employer estimates how much tax you'll owe based on your salary. And you can also indicate when you join a job, you're often given this form that you fill out that tells them, I have children or I'm married. Like, it tells you information that will influence your tax withholding. So the amount of tax that your employer withholds and then sends into the Canada Revenue Agency for you. As a freelancer, nobody's sending that tax, nobody's keeping that tax back and sending it in. You have to do it yourself. So at the end of the year, you need to sort out, oh, this is how much I earned, and this is the tax that I owe, and you'll need to send it in. So those are the 2 big differences. Nobody's sending in tax amounts for you, and you have to report your freelance income on this specific form. So let's take a look at that form. So the T2125 is called the Statement of Business or Professional Activities. So you as a freelancer have business activities. Professional, when you look at the form, it says, here's a spot to enter business activities, here's a spot to enter professional activities. And you may be wondering, well, which one do I use? The professional activities is typically if you're a member of a regulated profession, so a lawyer, a dentist, maybe, I don't know who else would be in that category, but if you're not a profession who belongs to a professional association, so freelance artists, freelance writers, you have business income and not professional income. It actually doesn't make that much difference. It's just that professional income is reported very slightly differently, but you use the statement of business income, statement of business activities. Okay, so on that form, on that statement of business or professional activities, you report how much income did you earn as a freelancer, the expenses that you paid to support your freelance business, and then after you take that top level, I earned this much income, and I subtracted out these much expenses, that's my net income, and your tax is calculated on that net income. So the amount of income that's left over after you subtract all your expenses. This is a picture. Like, which expenses? I mean, this is the first question people typically have when they get into freelancing is, well, what can I actually claim? Now, I couldn't fit the whole part of the form on this slide, but in part 4 of that T2125 form, and if I go back, I think, we didn't put links in this, but you can, in the article version of this, all the links are enabled, so it can link you. It's linked right to that T2125. You don't have to go looking for it, although if you do, it is easy to find. But that's a picture of part of the place on the T2125 where you report your expenses. So if you read down that list, these are the types of expenses that you can claim: advertising, meals, bad debts, which you may in fact encounter as a freelancer, insurance, interest, and so on. So there's a little bit more that goes down under that. And there's also an area called other expenses. So if you have expenses that don't fit in those predetermined categories, you can use that other expenses category. The main ones for freelancers tend to be office expenses and professional fees. So office expenses are printer ink and subscriptions to newsletters that you need to keep on top of your industry, and everything you buy at Staples. And then professional fees might be accounting fees. Maybe you got some legal advice from a lawyer. See, it actually says legal and accounting fees. Those are the main ones. You might have other professional fees, but those are the ones that you'd probably have the most, like the largest expenses in those categories. Before we leave this slide, do people have questions specifically about, I know there's going to be a lot of questions about expenses, but any burning questions coming up right now?
The burning questions that are coming up, one was, can somebody, sorry, I'm taking sticky notes, claiming expense from a previous year. So somebody bought a laptop last year, they're wondering if they can claim it this year. And then the second one that was also asked is that, can they write off something that was purchased using their spouse's credit card?
So I'm going to answer. So I'm going to answer the second one, and we're going to get to the first one in a few slides. So the second question is, it doesn't matter if your spouse's credit card was used to buy it. It's still your expense. So you are going to need to, and we'll talk, and when we talk about how to prepare for filing your taxes, how to keep your records intact, but you just need to keep that receipt. The fact that your spouse paid for it. I mean, this is kind of the thing about being a freelancer, is that your personal expenses and your business expenses are very intermingled. So when you're incorporated, for example, that's when you create a separate entity and it has its own tax return. But as a freelancer or a sole proprietor, your personal tax situation and your business tax situation are all mixed together on this one return. So having a spouse buy something is no problem. Okay, so you're going to...
Sorry.
Yeah.
Oh, one more other important question, which I think is worth mentioning, is Michelle asks, what goes under bad debt?
Oh, well, that's where somebody owes you money. This has only happened to me once in 25 years, but I did work for somebody who didn't pay me. And after a certain point, I would have to look up the exact rule, but it might be 12 months. You get to say, you know what, they're never going to pay me, and I'm going to put that amount that I'm owed down as a bad debt because it's an expense to me. You don't have to just forgive that. Okay. So that's where we're putting our net income and our expenses. So the next question, oh, hang on. I'm just going to move something around on my screen. The next slide, why am I not getting to it? Oh, here we go. Wait, did I go too far ahead? No, here we go. The next question that people often have is, okay, so this is very true for this past year in particular. I'm working from home. So where do I put those working from home expenses? So let's say that you're using one room or you have a 1-bedroom condo and you're using part of your bedroom as an office. I mean, that describes, I'm sitting in the basement of my house, right? So I have done this business use of home expense calculation for many years now. So I'm going to add up all the expenses that are related to heating and having electricity and home insurance or condo insurance, maintenance, like I painted the wall behind me, that was a maintenance expense. If you own your home and you have a mortgage, you can claim mortgage interest. If you do not own your home, rent. It's not on there, but you can absolutely claim a portion of your rent. So you say, okay, so let's say if your condo is, I'm going to use round numbers to make the math easy, but let's say that your condo is 1,000 square feet and you use 100 square feet for your business. You add up all the expenses that you have through the year for taking care of your house. So heat, all those ones that are listed. And then you take 10% of those, and that's what you can claim. So it will, if you're using software, when you put numbers in those 7A, 7B, 7C, 7D lines, it'll automatically add up and then subtract out the personal part. So it's a way to have part of your personal expenses be deducted from or included as an expense when you file your taxes. Now, somebody had a question about work from home. Does this cover that?
So far, I don't see anything, so I think we're good for now. But we
Okay.
will continue to ask questions, so I'll keep
Absolutely.
tabs of it.
But before I leave this slide, this is different from, so when you're an employee, you can also, if you're an employee and you're required to work from home, and that's been the case for many people over the past year, you would claim expenses as an employee. That's actually different. So this is called calculating business use of home because you're running a business. For an employee, they're calculating something called workspace in the home. So they are not running a business. They are working as an employee and they have a workspace in their home. The calculation is similar, but it's not the same. So make sure that it's on this T2125 form, but you want to claim business use of home instead of workspace from home. So there's a simplified method for the 2020 tax year around working from home. That's for employees. For freelancers, you've always been able to claim business use of home and nothing has changed for you.
Okay. I'm going to step in. Oh, sorry. No. Just going back to the home expense. So there are some good questions that have been brought up. First one is, how do you calculate the percentage for your work from home space, especially if you live in a tiny condo? And then along that, another question was like, what if you did both? What if you were employed and you were freelancing?
Okay, so I'm going to answer them in the reverse order again. So how you measure is you just get a tape measure. And it has to be reasonable. This is one where it's tricky because if you have a small condo and you say, okay, but I'm really using a lot of it as to support my business, and you say, okay, so my condo is 600 square feet and I'm using 500 square feet to run the business. So therefore, I should have said 400 and 500. I have 40% or some large number of my expenses are being claimed. I can't do math on the fly. It's possible that the CRA would come in and say that this isn't reasonable. So the guide for how much you can claim as a business use of home expense is that you have to be reasonable. So CRA is not gonna, if they look at your return, they may say this isn't a reasonable amount to claim, even if it's legitimate in the sense that I sleep in the corner in a hammock and everything else is covered with art supplies. If you don't want to sort of be on their list to be reviewed, just make sure that this is reasonable. It is reasonable to charge 10, 15, 20, 25% of your expenses. Those will not result in a review, or if you are reviewed, they will be accepted. It's when you start to get up into that 40%, 50%, 60%. Okay, so now back to what if I have employment income and freelance income? You can claim both. Now, one thing that CRA is going to do when you claim both is they're going to look and say, you weren't simultaneously working on your business and working as an employee at the same time. So this is a little deeper than we can go just in this seminar, but if this question comes to me, I'll answer it by email. What you end up doing is including a time allocation. So you're spreading I worked on my business for this many hours in a week and I worked as an employee for this many hours in a week. It should work out better for you in the sense that you can claim more, like you can claim the work from home as an employee, you can claim the business use of home, and it's totally legitimate. But they are going to look to say that you're not claiming like 24 hours for one and the same 24 hours for the other.
And just to sort of get clarification on that, to Ivy's question, do washrooms and kitchen area also take into account as part of that calculation, like my hallway, balcony? I don't know.
Yeah, I certainly work in my backyard, but to be honest, I moved into this house 20 years ago. I measured it at one point, and I've always I don't even remember whether I claimed 10 or 15%, but whatever the number is, I just claim that same number, and I don't, I measured it once and said that's reasonable, and then I just picked that number. My husband also works from home, like 4 feet from me, so he claims another 10 or 15%. So, okay. Motor vehicle expenses. This is another thing that you can claim as a business owner. People probably didn't drive too much in the last year, although some people may have, especially if you're running a delivery business. So this is very similar to the claim for your home office expenses or your workspace in the home. So that's the same principle that you add up. I drove 1,000 kilometers or 10,000 kilometers, and I drove 10,000 kilometers, and 5,000 of them were was for my business. And here's all my costs. I had fuel and oil. I had interest. There's a chart that you use. Like I was paying my car off over time, and so I paid interest to buy it, or I have lease payments. So you see interest and you see leasing later on. Car insurance, license and registration, maintenance and repairs. If you have an electric vehicle, you can claim the electricity, not the gas. So you have all those expenses. And when it says other expenses, I always put CAA in there. So in that case, if I drove 10,000 kilometers and 5,000 were the business, I would claim 50% of the cost. So this is different a little bit from the workspace business use of home, because you don't have to worry about claim. Like if you say I drove 80% of my kilometers for business, that will be accepted as reasonable. Although it's very unusual that you'd be able to claim all, because people are going to say you probably still went to the grocery store and drove somebody to the train station or something. So again, the principle is all the expenses divided by the number of kilometers driven for your business. Okay, so this goes to the question that somebody had about, I had something, a computer or a piece of equipment that I purchased in the past, and now I'm using it in my freelance business and I want to write it off. When you have bigger expenses, so this one is a little tricky to follow, but when you have a big expense, so you're doing podcasting, you've bought a webcam, you've bought lights, you've bought a microphone, those are larger items. If something costs $500 or more, you would usually claim it over time. So you wouldn't claim that whole expense in year one, you'd claim part of it. And you use this schedule, that claiming part of it is called claiming a capital cost allowance. Maybe you've heard that word depreciation. This is a very similar concept, that you take some of the cost, you claim it in year one, and then some. And so if your item is $1,000, you might claim $200 in year one, then you're left with $800, and you claim 20% of that $800, and so on until it's completely down to zero. So when you have an item like a computer that you purchased before you were a freelancer, you would actually enter it into this form. You'd figure out what the the depreciated cost is. So if you bought equipment, podcasting, I'm going to use podcasting. You bought podcasting equipment, you spent $2,000, but you bought it last year before you started freelancing. So you bought it in 2019, then you started freelancing in 2020. You would depreciate it by 1 year. So let's say it cost $2,000 and you would depreciate it. You have to look up what category things go into. I know this is complicated. I'm not making it sound simple because it's not simple. But you'd look at what category does this go into? Like that's called the class. Do you see that first column there is called class number? And so how quickly things get depreciated depends on what class they're in. So I bought this thing in 2019. I depreciated it by $400, and I entered that depreciated cost as my cost when I started freelancing. Before I go on from here, is that clear enough? That's like I said, it's a tricky, capital cost allowance is probably the trickiest thing that freelancers have to deal with.
I've got a question here. For people who are buying equipment and using financing, how would that work?
You're not an owner. So capital cost allowances for things that you own, it would be under the lease expense that we can see all the way back. It isn't. Okay, I cut this form off. There's leasing expenses is under there. Is it there? No, but it's on this form. I just cut it off before we hit there. Okay. Now, one more thing. We still haven't even talked about getting ready to file. We're just talking about understanding your taxes as a freelancer. Another important part, when you're an employee, you pay into the Canada pension plan, or if you're working in Quebec, the Quebec pension plan automatically. You're not even aware of those premiums. They're just being deducted by your employer and remitted to the Canada Revenue Agency as part of your paycheck. There's an employer portion that they pay as a payroll tax, and there's an employee portion that you pay, but it's deducted automatically and sent in for you. When you're a freelancer, you pay both portions, but it's calculated as part of your tax bill. So you don't have to do a separate calculation, and you don't have to make a separate payment. It just is when you do your tax return, at the end, it'll say you owe $2,000 of tax and $500 of CPP premiums. So your total bill is $2,500, and that you send it all into one spot. But this can really catch people like unaware, because the premiums are actually fairly high, and you're paying both sides of it. You're paying the employee portion and the employer portion, so it can look like a big amount that you're not expecting. All right, so we've gone over the T2125 and Canada Pension Plan premiums. Let's get into getting ready to file. So here we are. I'm going to get ready to file my income taxes. I have to do two things. I have to add up all my income, and I have to add up all my expenses. So how do you do that? You can use professional invoicing software. So if you have FreshBooks, for example, and you're sending out invoices to clients, you're saying, how much do they earn in a year? If you have professional invoicing software, it'll calculate it for you. Or you may just use a plain old spreadsheet where you've done invoices in Word or whatever, or Google Sheet or Google Doc. You've sent an invoice out, or a bill, or whatever you call it, and you can just make a spreadsheet. This is everything I earned in 2020 from my freelance business. So this is probably one of the easiest things. You probably have a pretty good idea of how much income you've earned. If worse comes to worse, you can just look at whatever financial institution, like I made this deposit. Oh yeah, that was my freelance income. So here we're going back to our T2125. This is exactly where you report it. So you might earn commissions or fees or sales revenue if you're selling goods. So here you go. Here's my T2125. This is where I report it. Here's all the income I earned. Now, we're not going to get into HST or GST deeply at all. We don't have time today. But if you are registered for HST or GST, in Ontario it would be HST, you also report, you see 3B, you report your GST there, but then you take it out again. So for 3G at the bottom. This is just, you're just recording, I earned this much income, and I also charge this much HST or GST to clients. If you are working outside of Canada, your clients are likely exempt from HST or GST. So you may have, if you are a freelancer who's only selling into the US market, for example, you would have income, but you would have no HST or GST to report. Although you should register for HST or GST, and that has to be another whole side conversation that we don't have time for. All right, so we've got our expenses added up, and we've recorded them on that T2125. Now we need to find all our business expenses. And this can be trickier than finding your income, because like I said, you probably have a pretty good idea of how much income you've earned. If you're using bookkeeping software, it can add up and sort up all your expenses. Of course, you can always use a spreadsheet, but this is where this is Benji's shining moment, where this is what Benji will do for you. Do you want to take a moment now or talk about it later?
I'll save it for later.
Okay.
There are special offers at the end.
Mm-hmm. So you've calculated your business expenses. You've gone through if you've got professional software, it's adding them up for you, but it could just be that you go through your credit card records, your bank statements, and even your receipts that you've gathered up for things that you've paid cash for over the year. And you add them all in your spreadsheet and you say, okay, here's all my expenses. Now, yes, here I said, where do you find them? You're going to comb through all those little slips and cards and receipts that you've got. If you make a spreadsheet, you want to enter the date, the kind of expense. So you could go back to that T2125 form, which gives you all those expense categories. So you might say, okay, on January 15th, I went to Staples. I bought something that goes in the office supplies category. So I've got my vendor. It cost me $10. Of that, 7 cents was GST. You need to record that. If you are registered for GST or HST, you need to record how much you paid out, like the GST that you paid on eligible supplies. Why do you want to have all that information, all that date, type of expense, who you got from, the amount, and the GST? It's because if the Canada Revenue Agency has questions about your expenses, you've got this beautiful spreadsheet that's ready to go. That is the end of this section. This is the end of getting ready to file, which is really just adding up your expenses and your income. So before we go on to filing, burning questions.
Yes, there are quite the questions going on. Okay, so one question was software expenses. So yes, you can write off software expenses, Canva, MailChimp, whichever software that you're using. So that is a yes to the multiple people that asked about software. Then the other question that is for when you're completing your capital cost allowance, do you claim the total cost? So let's say you bought a $5,000 laptop. Like, how does that specifically work?
Yes, you enter in the total. So you find the class for that. So let's say it's class 10. I'm just making up that number. So you go, if you're using tax software to file your return, this is much easier than if you're doing it in paper. And most people use software. So this isn't actually as hard as it sounds. So you find the class for that item, say, oh, it's class 10. I enter in my cost. I don't know whether you remember, but on that form it said UCC. That's the undepreciated capital cost. That means, what did you pay? So I paid $5,000, and it will automatically calculate how much you can claim.
Great. There's a few more. I've got sticky notes here. What happens if you purchase equipment and then you decided to sell it later?
Right. So in fact, I wonder if the form shows it. So we have our class number, we have the undepreciated, that's where we're putting our $5,000. That's what I had. I came into the business with that. I bought new things. Here we have column 5, proceeds of dispositions. That's I sold something in the same class. I bought some equipment, but I also sold some. You record it there.
Awesome. Another one is somebody was asking, wait, we're paying CPP?
Yeah.
And the follow-up to that is it better to overestimate how much we'll be paying? Like, what's the approach there?
It's calculated for you. So you don't have to do any estimation of how much you owe in CPP.
Okay. When might you charge GST, HST for a foreign client?
Oh, so it'll be weird circumstances, like the client has a substantial presence in Canada, but you're working with their California subsidiary, or it could be where you have a client, but then you're supplying something to them, and then they're selling back into Canada. But if you are, say, a freelance writer or a freelance illustrator, and you have clients around the world, and they don't have any relationship with Canada, there's no GST charge to those clients.
A few more questions, and just kind of want to make sure we're keeping track of time.
Yes.
What do you do if you are not registered for HST, but you charge for it?
Oh, you shouldn't do that. You should register only. You should only charge if you are registered. And if you have been charging, then you should register, and then you can add all those amounts that you charged onto your GST return that you're going to do.
This is an interesting one, which I think a lot of people might be wondering, is that what if you registered for GST, HST near the end of the year? Can you still claim
income? Yeah.
Yeah.
I don't remember off the top of my head, but there is a rule about how far back you can go. I think off the top of my head, it's like 90 days, but you'd have to actually look. And again, if somebody reminds me, I'll look it up and I'll send a response. Okay, so let's go on to filing your return. So you've got all that information gathered. You're ready to file. Again, you have two options. You can do this yourself, or you can work with a professional tax preparer. So the professional, if you want to do it yourself, there's tons of tax preparation software packages. Some are free. I use I've used Wealthsimple Tax is new. It's Simple Tax, now owned by Wealthsimple Tax, now owned by Wealthsimple. But before it was owned by Wealthsimple, it was just Simple Tax, and I use that, and I like it. You can do it using paper forms. I don't know why you would. There's some people who believe like you'll really understand the math well if you take the paper forms. And if you do that, they used to have them at the post office. I think you would actually need to download them now from the Canada Revenue Agency site. The drawback with that is that the tax package will send you every form, including many that you don't need. I don't personally see the argument for doing it on paper. I think it's crazy to do anything other than software. And software actually is so good because it guides you through. It asks you these questions like, did this circumstance, did you move during the year? Do you have charitable donations? So you don't have to know in advance. It will actually guide you. Okay, so that's preparing your return yourself. You can work with a tax pro. So there are kind of 3 ways that you can do that. You can work with a chartered professional accountant who offers personal tax services. This will be your most expensive option in virtually every case. You can work with a tax prep agency. So that's like H&R Block, or there's other ones that you see kind of driving around the neighborhood. The people who work for those agencies are people who have taken a course from that agency on how to prepare taxes. These, personally, I think these have a very mixed amount of success, that because they rely on people who are doing this part-time and who don't necessarily have a lot of experience. I'm not saying they're bad. I'm just saying that it's a mixed experience in my experience with working with tax prep agencies. Or you can work with somebody who offers tax prep services, but who isn't a CPA. I said at the beginning that tax doesn't belong to CPAs, and I really believe that. There's lots of people who are bookkeepers or tax preparers. This is what they do. They don't have a CPA, like they don't have a certification, an accounting certification, but they're perfectly competent to do personal tax. No matter who does it for you, you still have to sign off that the return is accurate and complete. So if something goes wrong in your taxes and you say, well, somebody else prepared it for me, Canada Revenue Agency says you still signed off on it. All right, so then I've chosen how I'm going to do it. I've got software. Well, now what do? I've got to enter all that software into the tax, all my information to the software or the paper forms. Then I have to submit my completed return by the deadline. So let's talk about, well, what is the deadline? So if you have a 2125 as part of your tax return, your return is due on June 15th. That's instead of the regular date of April 30th. So you have more time to file. This applies even if you also have employment income, and it also applies if you have a spouse or common law partner, even if they're not self-employed. Important though, the tax that you might owe is still due by April 30th. You just have more time to file the return. So in practice, especially if it's your first few years of self-employment, people still usually do it by April 30th. One thing that you can do is you can guesstimate how much tax you think you might owe and submit that amount without filing your return if you're not able to do it by April 30th. But technically, you have until June 15th to do your return. Now, what if you miss that deadline? Well, you're going to be assessed what's called a late filing penalty, which is 5% of the tax bill, which, if you think about it, if you don't owe anything, there is no penalty. So if you have a small amount of freelance income and you have expenses that wipe that income out, which is not uncommon, especially in the first years of business, you don't owe anything, there's no penalty for you to file late. Okay, I know I've done the return, I've entered everything in the software, I've submitted the software. Like when you file your return using software, it's submitted to the Canada Revenue Agency for you by the software preparers. And then it says you owe $2,000. How do I pay that? I can mail a check. You can transfer the funds electronically. That'll be an option that's offered to you when you're filing the return. You can pay by credit card, PayPal, set up a PAC from your bank account or by e-transfer, or you can also go to a Canada Post outlet or a bank or credit union and pay the bill there. So there's actually lots and lots of ways to pay. And if you cannot pay the full amount, then CRA asks you to make a payment arrangement. So you get in contact with them and say, I can't pay the full amount that I owe due by April 30th. They will charge you interest. It's 5%. It's actually not a bad rate, all things considered, especially if the alternative is that you're borrowing on, say, a credit card to make that tax payment. It's probably better to say, I'm going to deal with CRA's 5% rate. If you got any COVID-related income support last year, so CERB, EI, the CRB, the Canada Education Student Benefit, like any of those COVID-related things, you probably qualify for no interest on your tax bill for 2020 until April 2022. So you will still owe the tax, but if you can't pay on time or you have to pay overtime, you will not be charged any interest. So it's really, really important that if you qualify for that, that you're aware of it. All right. Now, I filed all this stuff. What do I do with all the paper? I have my spreadsheets, I have my receipts. If you file your taxes electronically, you just submitted electronic data to the Canada Revenue Agency. You didn't submit any receipts with that. So do you keep them? The answer is yes, because the Canada Revenue Agency might ask to see them, and they can go back for up to 6 years asking you questions about, can you please tell me more about this expense? Can we see the receipt for this? Can you tell me more about why you paid this amount? So you're going to keep all those things. I just go to the dollar store and get one of those accordion folders. It has 12 divisions. I say, here's my January receipts, my February receipts. It's nothing complicated. So this doesn't have to be complicated, but you need to find a place to put them and organize them, and then you'll be ready if CRA asks you any questions. Okay. I think we should go right, just in the interest of time, we're going to go right into this one because I've been answering quite a few questions along the way. All right, so you filed the return. This is the other thing. Like, what's the CRA going to do? It can feel like a black box, right? I've sent this off to the Canada Revenue Agency. What are they going to do? And so as part of this overall tax empowerment process, it's good to have an idea of what CRA will do with your return. So Canada's tax system operates on what we call a self-assessment basis. That means you yourself assess what you owe. There are lots of other countries in the world where the government assesses what you owe and you either agree or disagree. But we do it, you assess and you send it in. So then they have to look at what you submitted. So when you've sent all that stuff in, you filed it by the date or you filed it late, it doesn't matter. Eventually, they'll look at it and they'll send you what's called a notice of assessment. They'll either physically mail it to you as snail mail, or if you have an electronic account with the Canada Revenue Agency, they'll stick it in that account and they'll email you that there's mail for you in your account. And in that account will be your notice of assessment. So your notice of assessment, it says, here, the second bullet. The notice of assessment says, yes, we agree with what you filed, or we adjusted it. And it will tell you, here's how much you have to pay, or we're sending you a refund. So you've already sent some money in, and they may say you sent in too much or you owe more. That's what the notice of assessment tells you. Before you even get that notice of assessment, you might get the CRA asking you to send in documents. So like I said a few minutes ago, you're filing this electronically, you didn't send any receipts in. So they might say, we'd like to see the receipts for your medical expenses, or if you moved and you have moving expenses. Those are two that they really like to see quite often. So that's when you're keeping everything, you have all your receipts together and you say, yes, Canada Revenue Agency, here's my list of medical expenses, here's my moving expenses, or because you're self-employed, here's my expenses for office supplies, or here's my expenses for my business in general. These are not audits. These are just reviews. They're matching that what you sent in can be matched to a receipt. Are they adjusting your return on your notice of assessment? They may say, well, we like your return as filed, but we adjusted a couple things. We might correct the amount of RSP room that you have. We might adjust the income that's reported on a tax slip. Sometimes people file and they forget, like you have a job that you had for 3 weeks and they sent you a T4, but you moved, so it went to the wrong address and you even forgot that you had that job. So it's not that uncommon that people forget to report to include a slip, a tax slip, like a T4 in their return. So those are the types of things that Canada Revenue Agency is adjusting. Not every return is adjusted. And if you disagree with their adjustment, you can ask that you say, I disagree, I think it's correct as filed, and they'll review your return for you. Now let's talk about audits, because people really, really worry about audits. And people often think that those reviews from the last few slides are audits. They're actually not. I mean, it may sound like a technical distinction, but an audit, here's my second bullet, it's a close examination of not just your tax return, but all the information you relied on preparing your tax return. So if your business is audited, they actually look at everything you filed. So they say, we want to see your complete books and records. So that's where you have those beautiful spreadsheets and your accordion file from the dollar store, and you say, here it is, auditor, you can look at everything. But the normal reviews that you get asking to verify bits of information, those aren't actually audits, and you don't need to worry about them. You can just comply and let them do their thing. Okay. Why are you going to be audited? Usually because the CRA has algorithms combing through returns as filed, and they have questions about, like, they'll do targeted audits for certain groups like construction agencies or people with a certain type of income. So they've said, this doesn't look right. We think there's a risk that there's something wrong in this return. Maybe your income has fluctuated a lot, or maybe your income or your expenses look very different from people who have similar situations to you. Being audited isn't the end of the world. I've been through full audits twice, and in both cases, they didn't make any adjustments to my return. But so you don't need to worry too much about it, but you need to know that it can happen.
Sorry, Alex.
Right. Yep.
If you could go back, please. And the second bullet about like what might be significantly from the norm. So
you're a real estate agent and you've made $200,000 and you've somehow claimed $300,000 of expenses. Whereas other people who are earning $200,000 who are also real estate agents only have expenses of $80,000. So it's obviously a made up example, but it's like they're looking and saying, people with these characteristics, why are their expenses so high? So when your audit is complete, you get a notice saying that's complete and that either no changes are required or changes are required, and you get a refund or a notice of an additional amount owing. There is a taxpayer bill of rights, though, that you are entitled to rely on. You can expect the auditor to be polite to you and to answer your questions and to give you adequate time to respond and to take the time to explain to you what they're doing and why. People think the CRA is very adversarial. But if you are attempting to comply, my experience with them, and I was a tax preparer for many years, but my experience with them personally and on behalf of clients is that they're very reasonable. They're enforcing, they're doing their job, they're enforcing the rules, and they're not out to get people unless people are trying to actually conceal something from them. We are wrapping up. All right. So this is where I think I turn over to you, Mohammed.
Yes. I think you have another screen after this where you just mentioned.
In summary, use an invoicing tool or a spreadsheet to track your income. Use a bookkeeping tool or spreadsheet to track your expenses. Work with a professional or file your taxes through tax software. Keep all your records for 6 years and rely on the taxpayer bill of rights in the event of an audit. Okay.
Perfect. I think I've done a screen takeover, right?
Yes.
Okay. Sweet. So there have been plenty of questions and my chat screen disappeared. Thank you, technology. You would think I would be better at this with being in tech and all. Okay, perfect. So there are a lot of questions that people have asked, and I'm going to try my best to go through all of them.
Okay, I'm going to quickly answer one that I see that it's important. If somebody says, I thought you're supposed to pay taxes quarterly. If you're a newbie freelancer, you will not need to pay quarterly. It's only if it's at least your second year freelancing and the tax you owe is more than $2,000.
Yeah. Okay. So the other questions that are somebody asks like, hey, what about paying for EI? How does that work?
Oh, well, as a freelancer, you are not eligible for regular EI. So you can participate in what's called special EI. That's the maternity and disability Canada caregiving components of EI. But for regular EI, as in I lost my job and I need income support, you're not eligible. So you typically don't pay in. But you can opt in for the so-called special components of EI.
Okay. And the other one is, can I claim GST, HST on my expenses if I haven't registered for GST, HST?
Yes, you're just not claiming it as HST. It's just part of the expense for you. So when you're registered, you separate that out as what's called an input tax credit, like a credit. I paid this HST and I'm going to deduct it from the HST that I'm remitting. When you are not registered, it's just part of your overall expense. I want to answer the question about income in different currencies. Two ways to do it. You can either convert it every time, or you can select the rate in effect for that year and use that single rate. And the CRA actually publishes the rate.
Oh, so it's just one specific rate for the whole year rather than that date rate at that specific day?
But you can't go back and forth. So there is some currency arbitrage that you need to figure out when you're filing your taxes if you have income in different currencies.
Sounds good. What about purchases that were made in cash, especially, you found this used equipment on Kijiji? There is technically no receipt. Valid.
Yeah, I know. Just write yourself a receipt. You can buy a receipt book at the dollar store. I mean, this year in particular, I made a lot of purchases on Facebook Marketplace, but I just did them as debits from my business account. And then I told my bookkeeper, hey, that's a desk I bought from somebody on Facebook Marketplace.
And I guess my anxiety part of me is just like, I can just do that. I can just create myself my own receipt. Like, wouldn't Sarah be like, no, you just made this thing up? Like, how?
Well, it's not a business for them, right? So they're not, I mean, maybe it is, but you're buying, I don't know what you're buying. You're buying a chair or a desk or a piece of artwork. It's not somebody's business. They don't have any obligation to give you receipts, but you're just recording a cash expense. In the past, people paid everything in cash, gas, everything, and it's still completely legitimate expense.
Okay. All right. So Samantha is asking, I've had freelance jobs before, but never claimed anything with them. If I claim as a freelancer this year, is it then technically my first year according to taxes?
Yeah, sure.
Okay. And Gina is asking, what do you do for health insurance?
Well, it's a good, big, tricky question, isn't it? I've never had private health insurance, so I pay everything that I need to myself. There are not good solutions around that for freelancers.
Yeah, working on it.
Yeah, exactly.
Okay, so I think I've covered all of the questions that people have had. If somebody still has any questions, please add them to the chat that you feel I haven't covered yet. One thing I'll just add for my own personal reasons, just because it's top of mind for me, is crypto. So if you've been buying Bitcoin or Ethereum or anything, just be mindful of that. Just because when you're buying it and you're holding it, there's no taxable event. So technically you're not paying any taxes yet. However, when you go to sell it, it'll likely be considered a capital gains. The one thing just to be careful of is a lot of times people think that they buy Bitcoin and then they buy another cryptocurrency with that Bitcoin. And, because it's not Canadian dollars or cash, that it's not a taxable event. That's completely false. That's actually a taxable event and you will have to pay capital gains on it. So just be mindful of that. So that's my personal rant about that. Oh yeah, sorry. That's the question I forgot, which is, when should you incorporate?
When you can reliably leave more money in the corporation than you are withdrawing to meet your personal day-to-day spending needs. Because the reason to incorporate, other than for liability reasons, is to leave money in the corporation where it's taxed at lower rates. So if you're taking all the money out, you're not benefiting from that tax advantage, so don't incorporate.
Awesome. Is it a good idea to have a separate bank account for your freelance business?
Yes. Because it makes the record keeping easier.
Yeah. Fingers crossed we can talk about the bank that will be launching soon. So that'll be fun. Okay, awesome. So we're going to continue just because we're coming pretty close to 1 o'clock or 2 o'clock, sorry. We're just going to do a pop quiz, so make sure you've got your chat ready. I'll ask a question, and the first person to answer will get a 1-year subscription to Benji, and hopefully you get a chance to give it a go, and you also provide me with feedback. But I'll also send an email with the recording of the video, as well as a discount code for anyone else that still wants to try Benji and be able to take advantage of that. So hope you're all ready. Let's go. How long do you need to keep your business records for? Oh, whoa. Wow, that was fast. It's just like somebody had their fingers on the keyboard. Oh my God. Okay, Aram, you're the first person. That was fast. Sorry, that caught me off guard. Okay, sweet. Don't worry. For anyone else, message me. I'll provide you with a discount code nonetheless, and I'll also include that discount code for everyone else. We're actually going to be changing our prices, so it'll be $100 for Benji per tax year, and the discount code will be for $20 off, so essentially paying $80. And if you don't find $500 or more in tax write-offs, you can ask for your money back. So that's a great offer. It's a no-brainer. I'll continue. So 6 years is how long you need to keep your records for. Also, just to kind of wrap up again, Benji, we find tax write-offs for Canadian freelancers. On average, our users find just over $9,000 in tax savings per year. We offer a 90-day free trial, no credit card requires. So it's a great opportunity for you to get signed up and be able to give it a go. If you sign up before I send this email out, don't worry, I'll be able to just let me know. Email me, mohammed@betterwithbenji.com, and I'll add that credit to your account. The other thing I also want to just shamelessly plug here, since I'm doing all the shameless plugs, is to subscribe to Freelance Canada podcast. It's a show about what it's really like to freelance in Canada. And if you're a freelancer who's been freelancing for a few years now and you've got something you'd love to share or teach others, I'd love to have you on the podcast, so get in touch with me about that as well too. And yeah, we'll wrap up here. I'll make sure there aren't any other questions. Can we file?
Yes.
Can we file paying for Benji under our taxes?
Yes.
I think, are they asking, can they write off Benji?
Yeah, I think so.
Okay. Yeah. Yes, you can write off Benji 100%. That's
the business expense.
Exactly. It's the software you're using. That's part of it. Okay. How do I know whether to choose cash or accrual method? What happens?
That's accrual method is for professionals. You're going to use a cash method. How can you get in touch with me? Do you see in the bottom right of your screen @Moneygall? That is the best, honestly, the best way to reach me. That's my Twitter.
Awesome. Everyone, thank you so much for joining us. Alexander, thank you so much for this opportunity to learn from you. Again, if you have any questions, please get in touch with either of us on Twitter or on Instagram.
We have a huge guide. We wrote this all out as a huge long guide that Mohammed is publishing. So you can put comments on, I assume you can put comments on that. There's tons of information, more than we even covered here in that guide.
Yes. Yeah, I'll be including that in the email that I'll send out. So again, keep in touch and send us all your questions. Have a great one, everyone. Take care.